route. Okay, so looking at these common types of mortgages, you have your conventional loan. For the conventional loan, your down payment is usually can be as low as 3% down. There is a minimum score requirement, and it varies depending on the lender. What I've been seeing a lot lately in the last year or so is usually to be approved at the conventional loan level, you usually have to have a score of about 700. And then PMI, which I talked about earlier, may be required. Remember that PMI is your mortgage insurance that is needed if you put down less than 20%. Again, I am a retail lender, so I can shop around, and I do have some programs that will allow you to have no PMI with 10% down. So, just don't, you see, this is the standard, but just know that we can always tailor make something to be beneficial to you. Then you have your FHA loan. This loan is very popular, especially among first-time home buyers, because it is backed by the government. It requires a very small down payment of 3.5%. And you can qualify for this mortgage with a credit score as low as 580. Of course, there are other lenders out there. Like I said, I'm a retail lender. And so I even have some lenders that will allow you to get an FHA loan with a score as low as 550 with 10% down. So just remember, these things are kind of the standard, but they're not always set in stone. The FHA program is a very good program for a first-time home buyer, or even for someone who hasn't owned a home in more than 3 years. The flip side of that, I have the UFMIP, that's the upfront mortgage insurance that's required of an FHA loan. That insurance is an additional insurance that's similar to the PMI insurance on the conventional side. And what happens with that insurance is that's because you put down less than 20%. And that insurance is going to stay with you for the life of the loan. So sometimes people decide to go FHA to get in a home. And once enough equity is built into that home, they will refinance to get out of that, to get up under that mortgage insurance. Does that make sense for everyone? I hope it does. The next loan is a VA loan. I love VA loans. It's kind of like one of my niche. It is a government-backed loan also for veterans and military personnel. It has 100% financing, and it may have a funding fee. The funding fee is a certain percentage of the loan that is paid to the VA's office. So they decide whether that funding fee is due and what that percentage would be based on if this is your first time getting a VA loan or your subsequent loan. Also, it does have the benefit if you are a veteran and you have a service-related disability, you can become eligible to waive that funding fee. So it's a great program for our veterans. We can't do enough for the people who serve our country. So I love VA loans. And then there's the USDA loan. You don't hear this loan being talked about very much. But lately in the Houston area or the outskirts of the Houston area, we have found that some properties do qualify for this loan because they are out in the country, as they say, in the rural areas. And it has 100% financing also, and is backed by the government. But there are income limits, and it depends on the county that you're looking to purchase in to see what those limits are. And your debt to income, which I'm going to talk about in a little while, has to be a certain percentage, pretty low, okay, to qualify for that loan. Then, last but certainly not least, is the jumbo loan. Jumbo loans are simply loans that are over $647,000 in most states for this year. That amount changes every year. But for the 2022 year, is that amount. For a jumbo loan, that's for this big, huge home, and you see them out there now. You do have to have a minimum score requirement, usually in the 7s, and you have to have pretty low debt because the bulk of your income is probably going to be that jumbo loan. If you have any questions about any of these mortgages that you want to go into detail with, just drop it in the chat later, or you can save your